The Nasdaq has seen positive gains on the year after ripping 30% from its lows in March. Tech stocks such as Facebook, Apple, Amazon, Netflix, and Alphabet, or aka Goog, has been at the forefront of this run-up. We commonly classify those as FANG stocks, and they have been on a tear over the last 6 weeks. But in my opinion, there are other tech stocks that are flying under the radar, at least a little bit, and I think there definitely still some value to invest in those that could potentially provide a greater return other than investing in just those FANG stocks. I got 3 underrated tech stocks that I think that are worth taking a look at and potentially buying coming up. What's going on, everybody? So yeah, it doesn't really come to a surprise that the tech sector is doing so well, right? There's so much that we can do from home thanks to technology, and that's why we're seeing such a surge in this sector. But I'm going to break down 3 sectors within the tech sector I call subsectors, and I think that it's going to provide a really good snapshot of some of these stocks that are being overlooked as it compares to Facebook, Amazon, Netflix, and the like. But before I get to that, I want to welcome you to my channel. Hi, my name is Brad, and this is Own the Chaos. The stock market is a crazy and chaotic place, and I've made it my mission to help you own it. So if you want to see more content like this, hit that subscribe button, smash that notification bell, and if you get value out of today's video, I certainly would appreciate a good old thumbs up as well. So I split it up into 3 subcategories. One you're pretty familiar with, which is e-commerce, right? Your Amazons and that sort of thing. The other one's going to be cloud computing, and then finally the just quote-unquote stay-at-home or interactive tech stocks is these subsectors that I'm looking at here. And the first one in the e-commerce section is going to be Etsy. Now, I'm sure a lot of us are familiar with the Etsy brand, but they have been absolutely killing it over the last quarter, and I think that they could definitely one day start to at least get into the conversation of top e-commerce plays as it compares to Amazon. And here's why. You can scale your small business much like Amazon, but Etsy focuses on handmade products such as shoes, clothing, bags, and accessories, and now including face masks. Etsy has become the best place to find face masks in a shortage of face masks, so much so that they sold $130 million worth in April alone. And if we're comparing Etsy's revenue from last year, they've almost doubled that. And in a world where 33 million people are left without work, they are finding ways to make money, and so they are turning to places like Etsy. Now, you might be looking at me like I'm crazy because Etsy's jumped from a $30 low when the stock market crashed and is now sitting up around $84 a share, especially after these recent numbers have come out. But in my opinion, I still think there is room for extensive growth, explosive growth. Even when you take masks out of the equation, CEO Josh Silverman says that sales were up 79%, and just for the month of April, Etsy stores were up by double. This tells me, guys, that even as people go back to work, there might be some folks that stay behind and can still work from home and are figuring out that they can earn an honest living by creating and building things that people enjoy and love to do. It's apparent that Etsy is rapidly becoming the place for small businesses, and the barrier to entry isn't nearly as difficult as Amazon is. Also, compare the $1.2 trillion market cap to Amazon to Etsy's $17 billion market cap, and it's easy to see that even comparing it to Amazon, that Etsy is very much underrated at this point, and I think eventually will go up well over $100 per share. It may even happen this quarter. So in my opinion, I still think it's very underrated, and I would be looking to scoop up anything under $80 a share as far as Etsy is concerned. All right, now before I get to this next one, I just want to invite you guys over to the Chaos Crew real quick. If you just click on the join button on my channel or right underneath of this video, for $4.99 a month, you get a watch list for me every single day of the week. It's a watch list of what's going on in the stock market. You get it right before the bell rings, and for something as low as $4.99 a month, I think it's a really incredible value. So if you want to be a part of that, you want to go check that out, click the join button. I would love to see you over at the Chaos Crew. Okay, so the second top underrated stock that I am looking at, and it has to do with cloud computing. This is Fastly, ticker symbol FSLY. They are a content delivery network offering edge cloud platform software development, content delivery, video and streaming security, among other things. Fastly has been getting a lot of attention lately, crushing their latest earnings report by 10 cents. Revenues in the first quarter jumped 38%, beating the consensus that was $59 million and actually coming in at $63 $3 million. The increase mostly occurred late March, according to them, increased by traffic to the platform, according to CEO Josh Bixby. He goes on to say here that these unprecedented times highlight the importance of digital transformation now more than ever, and our innovative and resilient customer base enables us to be confident in the demand for our mission-critical services and accelerated growth of our business. In my opinion, Fastly still has room to run here. People and businesses that weren't taking advantage of cloud-based services before are now, so that when this shelter in place is over and people start getting back to work on a normal basis, the cloud services will still be there and people will still be leveraging them because they see the incredible value that they provide. Fastly is actually one of the few companies that raised its full year 2020 outlook, which a lot of the FANG stocks did not. They actually pulled them off the table. They are stating now they expect up to $290 million in revenue compared to the $255 that was expected at the beginning of the year. A quick look in the Fastly, and it's easy to see that even at this price where it's at right now, it still is considered underrated compared to these larger cap tech stocks. And I think that these are some of the emerging ones that we will see moving forward. Now, the earnings per share on Fastly in this last quarter were actually at a loss. I expect them to be positive coming into the next quarter. It'll be interesting to see if they do. Okay, guys, so we're coming up on the last underrated tech stock here today. And surprisingly enough, it's going to be Peloton. This sector that we're talking about here is the interactive or quote-unquote stay-at-home type plays, and Peloton fits that bill perfectly. We're not just working from home, we're doing everything from home, right? And that includes going to the gym. We can't go to the gym, so now our home is becoming the gym. And this is where fitness platform Peloton has been shining. Peloton is a platform for live and on-demand indoor cycling classes. Since their recent earnings report, they are another one of the very, very few companies that have a much more positive outlook as a result of the market crash and the Rona. They are raising their expectations to receive about $1.7 billion in revenue compared to the $1.5 billion that was expected at the beginning of the year. And this would represent an 80% jump from last year's revenue numbers. Paid digital subscribers for the month of April were up by 64%. That is an absolutely crazy number. Now, this has been a little bit of an issue for them as far as getting bikes out to users, especially with the kind of demand that they've been receiving. But I think this is probably a good problem to have. They will get this sorted out, as they actually alluded to in their conference call. And I think that Peloton's going to be in great shape moving forward. This, in my opinion, has been a great alternative for regular gym goers. And even when the shelter in place gets lifted for a lot of states, how many of you are willing to go straight to the gym and use gym equipment that is being used by everybody else that could potentially be infected? I just don't see everybody making a mad dash to the gym once everybody is allowed back out as normal. In the month of April, they actually broke a record in the amount of people that were streaming and working out together. So it has been an absolutely crazy time for Peloton. And in my opinion, I think the price per share on Peloton under $40 would be a steal. But don't be surprised if we break $60 a share before the end of this quarter. Man, you Peloton users got me feeling lazy. I think it's time for a walk.
Well, that's better. It's a nice day out anyway. Why not take a walk? Which is kind of ironic because I just talked about the demand of Peloton, right? And how you should be buying all these bikes, but for me, I probably won't be buying it. I think Peloton is just too expensive, but it's no mistake that the demand is certainly there. So I want to hear from you guys though. It doesn't matter what I think. Let me hear from you. Leave me some comments down below. What do you guys think about the top underrated stocks that I have listed here? Do you think that Peloton is it? Do you think that Fastly could make a huge run? What do you think about Etsy and its competition with Amazon? Do you think that there's something that could be said for the new way to do small business online? And lastly, do you think that I need a haircut? Because it is driving me absolutely crazy. Can somebody please make me a house call and please cut my hair? But that's gonna do it for me, folks. I will leave you with that and I will finish my walk. If you got value out of today's video, I certainly would appreciate a thumbs up. The wind's blowing my hair like crazy. And if you are not subscribed to this channel, hopefully I earned your subscription from that as well. Guys, thank you so much for tuning in. As always, I will see you all before the bell, and B. Smith is out.
The stock market has been on an absolute tear over the last couple of weeks. Oil has now risen up to $24 a barrel. The Nasdaq is actually green